Hello everyone, welcome to SFC Exclusive. Today we are focusing on Japan. First in the news, on August 8th, a powerful 17.1 magnitude earthquake occurred off the southern island of Kyushu in Japan. Could this further affect Japan's already vulnerable economy and financial markets? More on the potential impact of this event, let's hear from Chen Zilei, Director of Japan Economic Research Center at Shanghai University of Foreign Trade and Economic Cooperation. 陈老师您好，九州岛附近发生了7.1级强震，九州素有龟岛之称，是否可能会影响到半导体、科技等产业？目前情况如何？
首先呢，这一次的地震，它是发生在宫崎县的日向滩，它的震源中心。那么，它的地震的规模是7.1级。那么，像受到影响的宫崎县，包括鹿儿岛包括熊本，这些地方呢。我们说受到影响的这个震级震度他们叫，那么大概是5到6级之间。那么和上次的这个福岛相比呢，它也是相当小规模的。比较关注的地震造成的这个影响，海啸特别是。那么这次的海啸呢，估算是1米左右的规模。那么这个规模也不是很大，这第一个。所以地震本身对人们的生命财产安全带来的影响不大，这个带来的冲击也不大那么对产业带来的影响呢，我们首先关注的是核电站。所以宫崎它那里有一个川内核电站，这次正常运行，没有受任何影响。那么这第一个。那么第二个呢，这个新干线包括山阳新干线、九州新干线、西九州新干线，这个地震当时受了一些影响，但是马上就正常运行。唯一一个有一点影响的是当地的石油储罐，这个有13个石油储罐呢，这个当中有一部分发生了少量的泄漏，那么也不影响生产经营也不会发生火灾略微受影响。根据消息整个我们可以做出这么一个判断，那么也就是对企业带来的影响，对交通带来的影响也不大。那么人们的正常生活呢，秩序呢也没有改变。那么所以总体来说，对目前我们比较关注的是这个我们说九州岛嘛，它是一个产业中心对这个产业基地会不会带来什么冲击和影响？从目前来看，物流生产经营各方面影响并不大。
那么此次地震会不会对日本近期本就波动剧烈的金融市场以及复苏中的经济造成进一步的扰动？
有一个不确定的因素，因为这次的地震，这个日向滩它这个震源是正好处于这个日本南海海槽的这个部分。那么这个部分比较敏感，因为多年以来日本的地震专家一直要求日本政府和社会做好南海海槽发生超大级地震的这个准备。那么日本呢，由于是个多震的国家，它的防灾减灾机制各方面都比较完备这次呢，我们看到它动员的也比较迅速。那么中日之间呢，围绕防灾减灾呢，它是也有合作机制的日本的一些经验在我们这里可以。但问题是这一次发生的这个震源这个地点是比较敏感所以这引起了日本社会的一部分恐慌，也就是说，是不是一个南海海槽这个超大型地震的一个前兆，是不是有的？那么具体是不是这样呢？我们还是要有待观察，让专门的人士做出一个研判。但是呢，这个一个不确定因素呢，的确是对日本整个社会它的各方面 心态还是带来了一些影响。那么我们要关注的是，关于这部分的风险不确定性，会不会在目前的日本的资本市场不是很稳定的状态底下，会不会被进一步的放大？我们还是要有待观察。从目前来看，还是影响程度有限。所以，这次呢，同样虽然这个规模不大，造成的影响看似不大，我们还要关注二次灾害，这是非常重要的。上一次我们说，就是地震和海啸带来的二次灾害是核电站事故啊，所以这一次我们也是要关注的，还是要要有这个风险防范的意识，包括资本市场包括日本经济啊。虽然现在是资本市场正好是波动期，日本经济在复苏期啊，尽管不会产生像这个我们说东日本大地震带来冲击那么大，但是也是不可以掉以轻心的。
谢谢陈老师。The recent turbulence in global markets has raised some serious questions, especially with Japanese stocks seeing their biggest drop since 1987, and the VIX index, a key measure of market volatility, has hit its highest level since the COVID-19 pandemic. What's driving this sharp shift in market sentiment? Was this just an isolated incident, or could it signal the start of a broader downturn? And more importantly, where does the Japanese economy go from here? To help us unpack these questions, we're joined by Shigeto Nagai, former Bank of Japan official and head of Japan economics at Oxford Economics. Hello, Ms. Shigeto. Thank you for being here. Let's dive right in. What has triggered the recent rollercoaster ride in global markets?
Right. I think the main trigger was a sudden rise in uncertainty and concern about the conduct of monetary policy in the United States and in Japan. And more importantly, the US monetary policy. I think the July employment report suddenly invite a kind of over pessimism about the US economic outlook. But the important background of this sharp rise in uncertainty is a very unusually cautious, hawkish conduct of monetary policy by the US Central Bank. The US Central Bank has been very cautious and hawkish because they are really desperate to contain inflation expectation and to show their determination to fight inflation. The US Central Bank has committed itself not to start cutting interest rates until they confirm that inflation and wage growth settle down to the level consistent with 2% inflation target. It was inevitable choice for them, but at the same time, this very cautious, hawkish style of monetary policy has invited a rising concern about being behind the curve, which means that's too late to cut interest rates. So this kind of unusual conduct of monetary policy stance has invited such a sudden sharp rise in uncertainty, a concern about US economic outlook. In Japan, at the July meeting, the Bank of Japan, Japanese Central Bank, made a surprise move to raise rates without clear evidence of ongoing inflation, and also introduce new hawkish forward guidance. And they said that real interest rate is very low. So unless there's a significant negative risk to their economic price outlook, they will never hesitate to continue raising rates in the coming period. This has invited concern about the earlier and faster pace of interest rate rises in the coming period, which invited yen appreciation, as the Japanese stock market has been strongly supported by weakening of the yen, the market really panicked. So these two uncertainties over monetary policy, both in the US and Japan, has been a trigger of the recent roller coaster ride in the stock markets and the global financial markets.
You mentioned the impact of US monetary policy, and it is often said that what happens in the US economically and financially does not stay in the US. Are global markets likely to remain volatile until the Fed makes its decision in September?
I think, as I said, that the recent pessimism about US outlook is overblown. And it was really triggered by a single employment report for July. So if we come new data, we see more incoming data on prices and labor markets and growth, I think the markets, financial markets, will start to correct this over pessimistic view over the US economic outlook, even without waiting for the September possible rate hike by the US Central Bank.
So when do you think the Fed will cut rates?
Despite the recent roller coaster ride in the stock markets, we stick to our call that US central banks will cut interest rates twice within this year, in September and December.
Back to the recent volatility in the Japanese stock market. Do you think it was overreacted?
Yes, as you correctly pointed out, I think it was overreacted as evidenced by the strong recovery in the following days. Investors in the Japanese stock markets have been a bit too complacent about stable and benign market environment driven by persistent yen weakness. And also there are lots of positive developments ongoing in the Japanese industries. So they have been a bit too complacent. And also there are many new entrants to Japanese stock markets who really got panicked by this sudden drop in stock prices, which they haven't experienced in the recent period. There were many new foreign investors coming into Japanese stock markets with very limited knowledge and experience on Japan. And also looking at the domestic individual investors, there are also many new entrants, partly motivated by Japanese government savings to investment campaign, but also they are really spurred by relatively easy profit-making opportunities in recent months. I think this high ratio of new entrants, beginners to Japanese stock market, has also really made this panic more serious in the recent episode.
So what's next for the Japanese stock market? Have we hit the bottom already?
Yes, I think we have hit bottom. And we expect the stock price will gradually recover in line with gradual improvement in economic environment, both in a cyclical economic recovery and further progress in ongoing structural transformation of the economy. But at the same time, we should remember that the excessive yen weakness is unlikely to return in the short period, in the coming month, thanks to the BOJ's new hawkish forward guidance for monetary policy, which will limit the pace of coming stock price recovery. So it's recovering, but don't expect that everything will return to the, this pre-turmoil.
Before we delve deeper into the yen and Japanese monetary policy, what advice do you have for investors against the current uncertainties we see in the market?
Especially for investors to Japanese stock markets, I think I understand that financial markets have been disappointed, but I like to stress this time is different. And the ongoing structural transformation in the Japanese economy is real. So Japan's economy has been trapped in a disinflationary equilibrium for decades. But finally, Japan has started and initiated a structural transformations to regain its dynamism. And this has been driven by a secular shortage of labor against the background of fast aging of the society. So this transformation is irreversible movement. But at the same time, another important advice to investors to Japanese stock markets is please be patient because it may take some time to make a change in Japanese society.
At the very beginning, you mentioned that one of the reasons behind the stock market volatility was the Bank of Japan's surprising rate hike. Do you think the tightening was too aggressive? And do you anticipate more rate hikes this year?
The surprise move in July was okay, slightly earlier than our expectation of September time, but still the level of interest rate is low, so its impact on the real economy is quite limited. So in that sense, it's okay. As for this new hawkish forward guidance for monetary policy, I think it was a kind of inevitable choice for the BOJs to move in that way to really check the yen weakening pressure in the forex markets. And so far, they have been successful. So we now expect another hike in October this year, now believing that the BOJ really wants to normalize policy first up to some point. And as early as possible, unless any significant negative news endangers their price outlook. At the same time, this new forward guidance may invite a speculation about earlier rate hikes by the BOJ, but it has nothing to do with the terminal rate, where the rate hikes end. We still project that the BOJ's or Japan's natural rate or the terminal rate is around 1%. And we believe that rate hikes in the coming period will require more cautious consideration, more the policy rates get closer to the 1% terminal rate.
So stabilizing the yen or stabilizing the stock market, does Japan have to choose one over the other?
Yeah, good questions. I think the stable yen and stable stock prices can coexist. But you are right in the sense that the BOJ is really facing a kind of ultimate choice, which is to choose the yen or interest rate. Because to stop the yen weakening, BOJ should be more hawkish and keep raising rates. But it will raise the risk of overkilling the still vulnerable economy. I think this is a kind of conundrum the BOJ has been facing. And this conundrum will continue in the coming years, I should say.
How do you think the Bank of Japan can best handle the situation?
I think it requires taking a very delicate balance and maintaining the yen at a comfortable level. At the same time, maintaining or controlling the pace of rate hikes at a manageable level. And this delicate balancing act. What is necessary and essential is how to communicate with financial market, which has been very difficult, challenging, and so far the BOJ not being scoring good for this market communication thing because simply it's inviting market confusion so far.
There is a view that yen is one of the most undervalued currencies. What is your take on that? And how do you see the future trend of the yen?
Yes, the yen has been undervalued, especially entering this year. And this has been driven by the so-called yen carry trade, which has been very profitable thanks to a still wide interest rate differential between the United States and Japan, and also very low volatility in the foreign exchange market has been also helpful in making money through this yen carry trade. But the recent adjustment in the forex market has wiped out all these excesses earned during this year due to a sharp rise in market volatility and the uncertainty about the prospect of monetary policy, both in the United States and in Japan. So all the excesses have been wiped out, and the current level around the mid 140 yen per US dollar is a relatively comfortable level for many Japanese firms, I believe. And looking at the prospect for the yen, I think starting next year, we believe that the yen will gradually strengthen, reflecting a more rate cuts by the Fed and rate rises, increases by the BOJ. But beyond such short term, I think we believe the yen will continue to be weak and continues to be on a weak trend for two reasons. One reason is that given this Japan's weak economic fundamentals compared to the United States, the wide interest rate differential between the United States and Japan will persist, continue in the medium and long term. And the second reason is that there is a structural change in the Japanese external balance as represented in the current account balance. Japan used to be a champion of export, but these days, looking at the trade balance in Japan, it's more or less balanced, so it tends to be more negative. So this trade balance is no longer a driver of the yen in the forex market. On the other hand, if we look at the external balance of Japan, Japan is becoming more capital exporters. Japan has a huge savings, and huge savings will continue to increase thanks to aging of the society. And this money will flow out of Japanese economy and heading towards other foreign markets, looking for more returns. I think this kind of structural, persistent capital outflows will have a yen weakening impact in the long run. So in that sense, in the long term, there are going to be more secular weakness trend for the Japanese yen.
To wrap things up, how do you see the Japanese economy shaping up in the near future? What key factors do you think will play a role in its recovery and growth?
Sure. As I said, Japan is changing, and this time is different, and the ongoing change is real one. And the main driving force of this ongoing change is a secular shortage of labor amid the fast aging of the society. And I think this secular shortage of labor will continue to drive the ongoing economic recovery and also the ongoing structural transformation of the economy, because labor shortage will put upward pressure on wages, which will force firms to raise profitability to afford higher wages. And also higher wage will stimulate domestic demand by raising household income. Major risk to this kind of relatively benign baseline projection is the sustainability of this kind of wage growth feedback mechanism. And most importantly, whether small firms in Japanese economy, which is the majority of the corporate sector, their profitability tends to be low and their productivity tends to be lower than big firms. So whether these small firms can catch up with large firms in this wage-driven growth feedback mechanism, that is something we should carefully watch in the coming periods to see its sustainability.
Thank you, Ms. Shigeto, for sharing your insights with us.
Good. My pleasure. Thank you.
Just like Ms. Shigeto mentioned, the ongoing structural transformation in the Japanese economy is real. His key advice to investors in the Japanese stock market is to be patient. It may take some time for these changes to fully unfold in Japanese society. That's all for today's show. Thank you for watching. See you.